Let's see. I think we're on.
Hi, everybody. My name is Noble Dracone. I'm the founder of Dracone Capital Partners. I'm also the author of the books Winning the Trading Game and Trade Like a Pro. And I'm also the president of a company called Where Play Games, where we do mobile interactivity combined with NFTs and gaming. Today, Kyle Alicott asked me to be the guest host. And as you guys are familiar with VCTV, we find out the latest information, we share, we interact, and we talk about what's going on and what's happening in the industry. So today we're actually going to talk about tokenization and how that works in businesses. And does that make sense for every business, I guess would be the best statement. We're moving into a new era where we have non-fungible tokens, we have fungible tokens. We are trying to understand if these are assets, if these are currencies, where do they fall with securities. There's a lot of things to talk about and discuss in this space, especially with a lot of the new things that are happening. You know, we saw NBA Top Shots, $230 million over the last month. We see Street Fighter released on the Wax Protocol, 2 million, I think over 3 million in sales, 2 million in direct sales, 1 million in aftermarket sales in 24-hour period on a little known website called Atomic Hub. You see what's happened with Grimes. He put out a non-fungible token yesterday, Elon Musk's wife, and all of a sudden you have 6 million in sales on these tokens. What's going on and what's happening and where this phenomena is going. So I look forward to today's discussion. Today we have Greg Kidd, Global ID, and Greg, glad to have you on the show. Glad to be talking with you. Let's get into it. Tell us a little bit about yourself and what your company does and where we can go from here.
Thank you for having me. I'm Greg Kidd. Global ID is a form of identity, just like you have a name on Square, on Twitter or Skype. Global ID gives you a name. You collect credentials about that name. So instead of your identity being owned by a government or a corporation like Facebook, your identity. And to that identity, you attach a bundle of sticks. It might be all your messages, your files. It's definitely your wallet. And so one of the interesting things going forward is when you have your identity and you're buying these non-fungible tokens, that's just to us another form of a wallet. And so my background is been coming up. I was in the payments business, worked with a little organization called the Federal Reserve in the payments group in Washington, D.C. We run the ACH, the wire, cash, and check system for the United States, and have been involved in payment companies all my life. So as an early risk advisor at Square, first money in at Coinbase, was the chief risk officer for Ripple. And so have been really interested in seeing how digital wallets come along as the new place for people to hold their assets. And my gosh, banks, you know, you're lucky if at your bank you can hold even another currency besides dollars. But now with these new digital wallets, you can hold any and everything. And so to me, you might have seen that Square bought Tidal today. What's going to be in your wallet? And I don't see why every other form of tokenized assets, including NFTs, wouldn't be in your wallet and as liquid as any other form of value that is already being held in wallets. And so we're super excited. Every time you have one of those assets, it's going to be attached to an identity. And to make it more useful, more portable, it's going to be in a wallet. That's our view of the world.
Yeah, you know, and I think that's really kind of where we're headed, is that various people are going to be their own bank. That's kind of what the idea of when we talk about wallet, it's really the ability to be in control of both your money, your identity, your assets, and there is no third party as really functioning as a custodian, because that's really what the wallets are, right? You have your private key, your public key, but realistically, if you lose your private key, you kind of lose access to those wallets. I mean, there's over 4 million Bitcoin that people wish they could figure out how to get back to, right?
Yeah,
you know, you
Stefan
see it on the public key.
Yeah, Stefan Thomas, the CTO, I was with him. He's the one who can't find his he's got 2 guesses left on his 7,000 Bitcoin that are sitting on that little hard drive.
Yeah, I mean, you know, that's painful, right? That's almost $35 million. I mean, just sitting there that you can't touch. So, you know, what are you going to do? So my question is it kind of runs twofold. It's great for people to have personal responsibility and hold their assets. There's nothing wrong with that. But is this really the direction we should be going, where everyone does have that personal responsibility and there are no custodians and there is no help? And then the second, I guess, question that I really have is, does it make sense that everything is being tokenized, right? I mean, yeah, I'm a currency trader from way back, and the goal was to start focusing and narrowing it down from all the currencies in Europe, and that's where the euro comes into play, right? You have the euro, you have the pound, you have the dollar and the yen, and then the renminbi pops up, or the yuan, and then all of a sudden we have now inflated again to all these different tokens doing different things. I mean, does it make sense? Should every company, everybody, and every little idea have a token?
Well, of course. No, we'll come back. Let's circle back. So first, look. So our vision of the future for digital wallets is it's not all one or the other. So we still see that there'll be custodians, but we think there'll be custodial wallets sitting right alongside a non-custodial wallet. There's no reason why people wouldn't have a blockchain.com wallet and a Coinbase wallet. In fact, those two guys that are behind those two companies, they were partners. I met them when, it was back in the Y Combinator days, and they went separate ways. And both are successful offerings. I think blockchain.com, it's not getting the attention right now that Coinbase is, but it has 65 million wallets in force out there, and those are non-custodial wallets. But you can have both. Even Coinbase has launched a non-custodial wallet right alongside the custodial wallet. And if you have a non-custodial wallet and you don't want to be in the situation where you can't find your private key and you have to embarrassingly admit that you can't get access to 7,000 Bitcoin, you can have systems which are basically multi-sig or trustee systems, where before you're allowed to have more than a certain amount, you get a very strong reminder that you ought to have a backup, which is to divide your private key amongst a bunch of your trusted friends, not some centralized authority, but you can get it broken up amongst your friends. So, unless they kidnap all those friends, they can't put the key back together. And so even if you're like Stefan and you're down to two guesses, you have a backup, which is trustees. And so some combination of custodians and personal responsibility and a backup system will probably let us get to a different world than we're in today, where more and more of your assets are owned, your bundle of sticks are owned directly by you or by a digital wallet rather than a traditional bank or custodian. So I think the path forward is there. And the bank should be scared. They just don't do enough or provide enough value or enough differentiation from what you can get from Robinhood or Revolut or Venmo. I mean, they're all going in the direction of holding more in that wallet. Now, your second question is, should everything be tokenized? Well, it's that old saying, when you got a hammer, everything looks like a nail. And so, at one level, conceptually, yes, everything could or should be tokenized, at least everything that's sitting today on an old-fashioned ledger in a silo. Like all the title registries, it's hard to imagine why those clunky systems shouldn't move to this new reality. Now, what about things that have never been tokenized before? Like, how many of those things? Well, we know it's valuable to have like a title registry for a car, but like, do you need one for your bicycle? Like, where does it end? And so it does pretty much seem to me that like everything that gets manufactured or created or discovered, why wouldn't you have it sitting somewhere on a ledger, whether for customer service purposes?
I like the ledger idea, so don't get me wrong. Yeah. I think so. There's a combination of this, right? So when I say tokenized, I'm thinking ledger. I love the DLT, the distributed ledger technology. I agree. There's an opportunity to do DLT everywhere, and I believe that it's instant double entry bookkeeping. We've been needing it for years. It's verifiable. It's external, but when people are selling tokens on the idea of owning a bike, right? That you own a token, or you can buy a token that deals with the idea of a bike being registered with the police. Is that really a token that we need to have? And so there's all these little micro tokens that I see that pop up that are very similar to one another. They do a lot of esoteric things, and then all of a sudden people are trying to accumulate it. I mean, isn't that the idea of what forces all this speculation too in the marketplace and starts driving these 5,000% run ups, 7,000. I mean, like ridiculous run ups, only to later be disappointed. I mean, look, it's insane.
Well, I have this. With all this tokenization stuff going on, it suddenly occurred to me that I have this shoebox that I gave to like my daughter, and in that shoebox, it's full of baseball cards from like the 1960s, and it has a bunch of the original Batman cards in it. And I'm like, holy smokes! Like, maybe my 10-year-old daughter shouldn't be managing my my inventory of, and maybe I should take these down and get them all tokenized, like like a Pokemon card, because like it has a lot more liquid value if it does get tokenized. But look, you're right. I'm not going to spend this whole weekend running around my house finding all these different things and saying, by gosh, I better get them in and get them tokenized. But there are certain things that in our life that we hold valuable. If you were told like, hey, the house is burning down, you have 3 minutes to grab what you want to grab, maybe those are the things that should be tokenized. Or in a world of insurance where a bunch of stuff, you lose it, you don't really care, but you might want to tokenize the things that you actually care about, want to prove to the insurance company that you really had them, and it's not just like a memory game exercise. So I don't know where the marginal return for over tokenization happens, but right now, like, everybody's token crazy.
Yeah, they're just token crazy. I mean, like 200, 300 different, 1,000 different tokens. And, it's only going to get worse, right? Because the next component of this is now, particularly with the non-fungible token aspect of it, I have this asset, I have these baseball cards, these Batmans, I have this, whatever it is that I've made an NFT. Okay, how do I gain value from it? And so the next level of token is going to be the DeFi tokens that come out of the assets that are being staked for those tokens. And so now we're starting to get it's like this snowball effect. Do you believe that at the end of the day, this is what we needed in the financial system? We needed this kind of explosion and this expansion? Or do you think that there should be some curb around what's happening right now?
Well, I'm a little biased. Back in the year 2008, I was working for I worked for a regulatory consultancy firm called Promontory, which is basically a get out of jail firm for troubled financial institutions. I got dropped into Countrywide, which was the biggest securitizer of mortgages in the world. Mm-hmm. And, obviously that whole thing came crashing down. And so there was a lot of heat on securitization, which was basically a form of, securitization is sort of a form of tokenizing houses. You take houses, you bundle them up, you slice it up, you sell out pieces and whatnot. And yes, so there was a huge disaster at the time, and people asked, like, well, what's your solution for that? And I'm kind of in the camp where you need more of it rather than less of it. But the problem was it was an incomplete securitization. It was an incomplete transparency. It wasn't with the kind of technologies we have today. And so putting aside the challenges of interoperability between all these siloed token issuing things, if you could get things to be cross-tradable, have it be like a general escrow situation. So when you're selling this token or that token, there's a way of locking up the token while people lock up the money, and then you can have a fair exchange. I am in the camp where just tokenization and having it move toward being a generalizable protocol that's interoperable is a future state of the world where, I think like 100 years or 1,000 years, people will have a hard time imagining that there wasn't a time when everything wasn't tokenized, that it's just one of those things. If somebody came from another planet that already had tokenization and saw where we were, they'd be kind of like, oh, you mean there was a time when there wasn't an internet, or there was a time when there wasn't mobile phones? You mean there was a time when, assets weren't tokenized and you dealt with them in like some sort of like physical capacity? Really? So it is that, it's that funny sort of thing. If I like buy a tokenized like rare Ferrari and people are like, wow, you bought that Ferrari? And I go, yeah, I got the token right here. And they're like, well, did you ever drive it? And I'm like, no, but I got the token. Like, do I still feel good? I feel good because they have the token rather than the underlying asset. That's really sort of a sign of the times of like, our mentality, like what actually makes us feel like we own it. Like if I have a really hot car, but somebody gave it to me and it doesn't have a title with it, do I actually feel bad because I kind of know it's stolen and it's hot? Or do I feel better that I have the title even if I haven't driven the car because I know technically I'm the owner of some piece of like rare automotive history? And it's really a statement about our psychology, about what makes us feel like it's really how we feel about what we think. And do we actually appreciate the abstract value of things at a tokenized level? And I think increasingly in life we do. And so that's why tokenization is, it's a wave of the future. Now, whether it's been overhyped or it's in the yaya stage right now, probably, but I do think that this is not a reversible vector.
Really? So that's you. That's a big statement, and I have to concur. I think that we're not going backwards, right? When you have NBA Top Shots and they're literally selling video clips that you could watch on the internet for people to own, that's insane. It's a video clip that we literally could watch. We could watch a million times on the internet, but now, as to your statement, the having the token is that feel good moment that you own that clip somehow. I don't know if there's any income stream that comes from it. I don't know if there's any value in owning it except that you own it.
Well, there were some people that believed when photography was created that was going to be the end of painting. Like, why would people paint when you could take a picture? Or if people like had them, did a Van Gogh, somebody could take a picture of it, make a print, and put it up in their room. And people were like, well, you can have the digital equivalent. You can see the same picture, but you know what? It's not the same. Like actually having one of the signed copies, limited number type things in our society of bragging rights, keeping up with the Joneses. We care about that stuff. Do you have one of the select number as opposed to like one of the others? It's like blood diamonds versus like a De Beers diamond. Like people value the one that's cryptographically signed and secure and one of the limited issue type things. And so this NBA Top Shots, it is a revolutionary notion that, like you say, people pay for having one of the limited edition ones, even if they could watch it on YouTube.
So with this trajectory and what's happening, like where do you kind of give us a glimpse where you see the future going, but in the immediate future, the next year or so, where do the regulators play a part? That's kind of been your background for a long time. It has the technology, particularly in the financial sector, been so aggressive in development that the regulators are not just playing catch up. They seem like they have to kind of rewrite the whole book.
Yeah, I mean, at the end of the day, the reason I'm in identity, and this was for all these other companies, I went back. It's just like, just because you have a DeFi world and you have a ledger and you can transfer from one pseudo-anonymous address to another, it doesn't, just because you can do it, doesn't mean you should do it, and doesn't mean there's not going to be a knock on the door for somebody that has like guns and badges, right? And saying like, that is some form of money laundering or tax evasion or whatnot. And so I don't believe that once these assets become liquefied, that there's going to be any lower requirement for KYC regulation, money laundering, tax reporting than any other asset class. It's the same with gold, the same with Bitcoin. You're going to have situations where the authorities are going to want to like get their cut. And sure, there'll always be a black market where people are doing some things, off ledger. I have a 2x2 matrix. It's got two things on it. It's got green and gray. And green to green, that's like everything's regulatory and compliant. Green to gray, that's when somebody who is green spends money on something that's gray. That's called vice. Like I have money and I want to pay for something that isn't on the grid. And when something goes from gray to green, we know what that is. That's money laundering. They did something that's illegal and now they want to get it into the legal system. And when it's gray to gray, we call that honor amongst thieves. And there's always going to be a box of four things. Right now, maybe a lot of this new tokenized stuff isn't really hooked up with identity, and it's just, it's like the early days of the Bitcoin. But down the road, I believe this will become legitimate. More of it will move into the green to green box, but that doesn't mean there's still not green to gray and gray to green and gray to gray. But the exciting thing is, and really where we're working with Global ID, is that when you want to do become green to green, and you want to basically make sure the green to gray and gray to green isn't like too much, and monitor how much it is, because there's always going to be a gray line as to like what really is socially unacceptable versus illegal. How many degrees of separation do you need before something's not money laundering? That is always going to be out there, even though a bunch of regulators want it to be all bright line and no ambiguity. That's not the world we live in. And so we believe that identity is a key piece of bringing this into the mainstream, and not having it live out in the Wild West Mad Max hinterlands.
No, I hear you. And that's really the core of it. If you plan to use these assets past digital, and you want to like put it up as collateral at the bank, but now DeFi projects are creating their own collateralization methodology. You are going to have to say, "Hey, I bought this for $200, and now it's worth $25,000," and there's a tax to pay on that. There's no way to avoid it. There's no way to ignore it. That you now all of a sudden have a huge capital gains.
I'll give you an example of a product that we're really excited about launching. Is people know, like in our industry, we know that you get better interchange on credit cards versus debit cards. But with credit cards, there's risk. But you can have what is called a secured credit card. You can say, look, I'll give you $100,000 of credit, but you have to secure it against $200,000 of assets, right? And so if you don't pay, we have essentially a smart contract and we have a claim against those assets. So we're going to issue you credit, but it's secured credit. So it's essentially kind of DeFi riskless, and yet you can get many of the qualities of credit, like not paying till the end of the month, et cetera, whatnot, without taking risk like they do today, which is like an unsecured credit line. So there's a whole new era coming up where you're going to have essentially secured credit facilities, and DeFi is facilitating this already with just like staking various cryptos, but there's no reason that cannot expand to these assets. And anybody who's ever been like a repo man for cars knows what it is. It's called like, hard world lending. Like, I'll like you loan $5,000. Give me the title to your car and I'll keep it over here in this drawer until you pay me back. But now we can do the digital equivalent of that. And, it's interesting. People who want to save money, they don't have to save it as cash. They can invest it in valuable assets, and they're still not consuming. They're just saving in another form. And so the definition of consumption versus investment with this tokenization is going to change. Like, consumption is when you went and ate that meal and now it's in your belly. But when you go out and buy that Ferrari, you got to ask yourself, is that a consumption or is that investment, right? And so these people that are buying like stuff from NBA Top Shots, they can argue that they're not consuming, they're investing.
Yeah, no, it's a mixed bag. And, and I've talked to a few other people who are the whales in the space, and that's kind of where their mentality is. It's funny, and I've said this before, the way our history has always evolved is that wealth pops up immediately, and then the arts move instantly thereafter. In order
all the way back to the Romans, and yes.
Yeah, this has always been our society. This is how money works. And so it's no surprise that you have all this nouveau riche who are now wealthy because of Ethereum and Bitcoin now buying NFTs. I mean, it was an automatic transition over. But in the same instance, those same societies then find very quickly that a lot of stuff is just trash, that they bought bad stuff. And, one of the issues that, I think that we're starting to see is that people are just buying anything as an NFT and assets. Do you think what's going to happen is, as you said, those people who now lend and really want to stake, do you think that group is now going to be the curator of whether or not what you got was valuable or not? Or do you believe that it's always going to stay a peer-to-peer market, that the peers are going to be the determiners of the true value?
I don't know how to handicap that one. I mean, the great thing here now is with smart contracts and collateralization. Maybe there's going to be some time when people have collateralized assets and there's a market fall and it can't keep up and the DeFi system breaks down. But as long as there's this ability to essentially, call for collateral and it's done in smart contracts, this could work. Now, we saw with Robinhood and GameStop, they ran out of collateral. If the collateral system breaks down, or it's a centralized collateral system, and a party, in this case Robinhood, can't post the collateral, yeah, then the whole thing grinds to a halt, and people like lose confidence. And this is really the challenge of the DeFi model of smart contracts. And so, when these asset classes, when people lose faith in them, can the market deflate in a way that's systematic and doesn't create an overhang, lack of confidence in the overall system? We've seen that in the case of like the mortgage-backed security market, it didn't work. The market froze up. There was no liquidity. You couldn't get a mark, and things that were thought to be AAA just turned out to be total crap. And everybody got wiped up and down the ladder. Here, in theory, and I say in theory because it comes time now for me. I have an asset of portfolio to invest, and I have a bunch of assets that could be staked, and I'm trying to figure out how confident am I, how many different places am I going to distribute it over? If I had total confidence in the system, I would just be like, oh, I'm just going to do the one with the highest yield, just dump it in there. And I'm like, I don't think so. I don't think so. And
I think that's kind of right now the conversation, right? Because even the DeFi pools are starting to figure out that they also may not want to stake everything that's out there as well, right? There's a particular asset I had, a new exchange opened up on this particular asset. I love the asset. I love what we have. And then the exchange opened up and they offered, a DeFi project where we could stake. And solely because of the ranking of the exchange, I was like, yeah, I would never stake there. It's what is not going to happen because where the ranking of the exchange played the integral part of my decision on whether I was going to stake or not.
Look, in the old days of the 19th century in banking, I don't know if everybody, the reason they call it bank notes, there didn't used to be $1 bill issued by the Fed. Every bank issued its own script, as it was called, which in theory was backed by gold. And so, it was supposed to be staked, in gold, and then they would print this. But of course, people printed more than they had, and they hoped that everybody didn't show up at the same time, and basically caused like a complete financial crisis in the country. About every 5 or 6 years, there was like a panic. A bunch of banks failed. There were lots of tears. It wasn't until like the Federal Reserve Act of 1913, which said like, enough of this. We're not going to let you banks like issue banknotes anymore. We're going to issue the banknotes. We're going to manage the reserve requirements. But come on, that was a very centralized top-down approach. It worked pretty well at the Federal Reserve, and we still have crises, and people still.
It's a different function now, right? They still print money. What happened back then hasn't changed except it's centralized money printing, but we get it.
I mean, what's happened now is we don't really care about. When I say we, the Federal Reserve or the Treasury doesn't manage $1 trillion more here, $1 trillion more there. And so far we haven't seen inflation, but at some point, a bunch of the Bitcoin maximalists and some other people that are going to, invest in these NFTs think there's got to be a consequence. You can't just print 1 million here and 1 million there and not have some sort of debasement of the currency. So if you cannot trust national currencies, you're going to look for either alternative currencies or alternative assets, and that's where these tokens are sitting. And so. I mean, from a pure just diversification point of view, from a risk management point of view, there was a time when people were like, oh, Bitcoin and crypto is risky. And then it got to be to the point where like, hey, you don't have any of your portfolio in Bitcoin or crypto? Well, that's risky. And I got to believe that the same thing is going to happen, with these tokens. And it's not that different from the people, the nut jobs that are, got the bomb shelters, and in the bomb shelters, they got cans of fruit and bullets because they think that's the currency of the future. And so, they might be right. I might be wrong. I don't have a place where I've stored up a bunch of bullets and canned fruit, but maybe I should. And so in this case, this is an ability for you to put some of these tokens aside for a rainy day. And, whether they're, I work with Uphold. We did a deal with the Perth government they mine a lot of gold out in Western Australia, and now we have a token that you can buy, so you don't have to deal with the damn hassle of holding gold. It kind of feels good. It's yellow and stuff, but come on, it's a pain in the ass. And, it makes you likely to get like held up and robbed. And so, that's not a non-fungible token. That's very fungible, but, it's tokenized and it's backed by the Australian government. Sounds pretty good to me. If I want to own gold, that might be the best way to do it. And so for these other asset classes, why wouldn't you have some of it mixed in if you believe in prudent risk diversification?
Yeah, I think that's and also you have to be a futurist at some point. You have to not live just for the moment. It's great to have the bullets and the cans of fruit, but crypto too, right? So
you know down there too. When Mad Max shows up at the door and I gotta I gotta make a trade. I want to have a little bit of all those things.
Exactly. So no, it's good. It's Greg. As always, I've been on a couple panels with you. As always, it's great to hear you. It's great to see you. Enjoy your trip this weekend. Tell us, where people can find you, learn more about your project, and interact. And any last final words?
I mean, you can find me at Twitter, just Twitter/Greg Kidd. For Global ID, anybody can go and get a Global ID, get your name. Yeah, it's another Gold Rush, name Gold Rush. But we are going to be going public with the wallet, so not just whitelisted people. Everybody can get a wallet, and have a play there. Hard Yak is the venture firm. If you have ventures that you think are going to be in anything that intersects with identity, marketplaces, and payments, that's you can just write to @HardYaka. We can see you at any of those places. And I look forward to seeing you again, Noble. Enjoy the weather down in LA. I'm coming your way this weekend.
Awesome. And my name is Noble Dracone. You can find me on LinkedIn, Noble Dracone. You can also find me at Twitter, and you can reach out to me with further discussion. Talk about NFTs. Interact with us at Dracone Capital Partners to potentially invest or team up or kind of guide you on the space of non-fungible tokens and development. Guys, good to see you. Thank you, Maria. Thank you, Hasmik. Thank you, everybody at VCT for having us today. And look forward to seeing you guys soon.